And I think the reason we need to let the senior citizens that's on today's call hear all the inside secrets about reverse mortgages is this is a situation where what was it, like
43% of all working households are going to find themselves short of funds for their retirement needs. I mean, that's a staggering number.
Yeah, and I also saw in that same report, and this was done by a study up in Boston, that the largest group of people that are going to be financially strapped,
That's right,
is the group of 85 and older. And frankly, we don't know if we're going to be here or not, but we need to be prepared in case we are.
That's exactly right. And so that's the perfect lead-in for our discussion today, which is going to be on reverse mortgages.
Yeah.
A lot of people have heard of them. There's lots of misunderstanding and, frankly, misinformation going around. So we're going to clear a lot of that up today.
So, Ralph, let's just go first of all, what exactly is a reverse mortgage?
Sure. A reverse mortgage. Now, this can be summarized quickly as the reverse of a regular mortgage.
So what you mean by that, when a reverse mortgage is a mortgage that I'm putting on my house.
That's correct.
But instead of me having to make payments to the bank,
Right.
the bank is making payments to me.
That's exactly right. It's borrowing against the equity in your house, and there's all sorts of really cool ways that you can access it if it turns out that it makes good sense for you. A reverse mortgage is the promise to pay money to the borrower, which is you,
Which would be me as the senior citizen.
as the senior citizen, based on your age, on the property value, and on information that's available at the time of the origination.
And another thing I think that's very important for the callers to know,
There's no income or credit qualification.
in other words, I don't have to have any income,
No income at all.
and I could have gone bankruptcy
Last week.
That's
right.
So I don't have to credit qualify, and I don't have to income qualify because I don't have to make payments.
You're not making any payments, so all that stuff is irrelevant. Again, right here, bankruptcies, anything that might normally affect credit in an adverse manner, doesn't matter. Doesn't make any difference.
So basically what it does is a reverse mortgage is an exchange of the equity of my home for cash. So it converts part of my home's equity into a tax-free income.
Absolutely. Now, the amount that you can get is based on the difference between the fair market value and the amount that you owe on the property. So if you don't owe anything, well, then obviously there's a lot more that will be available to you.
So again, just for clarification, the bank is making me payments
Yes,
for the equity that I have in my home,
correct.
and I don't have to make any repayment until, why don't you go over that right now?
Okay, here's how it works. As long as the senior citizen is alive and lives in the property, then there is no repayment required. And it lives in the property as their primary residence. Now, even still, there's some fine points to this.
Okay.
If the owner moves out for longer than 12 months, if they sell the property or if they die, then the mortgage matures with interest. Now, talking about this just a little bit, moves out for longer than 12 months. That means 365 days go by where you haven't lived in the house.
Okay.
If 364 days have gone by and you move back into the house for 1 day for the year, well, you haven't moved out for 12 months, and that does not trigger a repayment.
So in other words, I could say go stay with my kids for almost a year.
For almost a year.
And as long as I come back and live in that house for 1 day
During the year.
during the year, then I can use that home.
That's not a trigger. Now, if you sell the house, then whatever has been borrowed against the mortgage, the reverse mortgage, with interest is payable. Or if you die.
Now, what if we do this, say, like with my wife? I'm married.
Sure, that's a great question.
How does that work out?
See it all the time.
Okay.
What happens is both of you are on the title.
Okay. Yeah.
And so you're both set up as, quote, borrowers, and the repayment is not triggered until both of you die or both of you move out.
So let's just say I'm driving home. So we did a reverse mortgage.
Yes.
And I'm driving home 1 day.
Correct.
And my time comes. A car runs a red light, and I die.
It's your time.
So my wife does not have to move out of the house.
That's right. That would be, of course, a traumatic event for your wife.
Yes.
But it does not trigger a repayment because she's still living in the house.
And she still keeps getting the checks.
The payments still keep coming, just like always. Okay. By the way, the same thing applies to moving out. If one of you is still living in the property, at least 1 day during the year,
then it's still good.
Then it's still good.
Okay.
No payments are made until any of these events happen that we're speaking about here.
So we don't make any payments at all the only payments that are made is the ones that come to me.
That's exactly right.
All right, well, we talk about us getting money being sent to me as a senior citizen.
Yes.
Okay, and we just want to make it clarify just for the callers.
Yes.
That I'm not really a senior citizen. I've got a, I'm close.
You're gaining, baby.
Yeah, I just made my AARP card. By the way, I just got it.
Well, congratulations.
Yeah, and but just I'm kind of playing the.
You're playing the role of the senior citizen.
I'm playing the role of the senior citizen just for this call.
For our discussion.
For our discussion. I just want to make
Absolutely.
that real clear.
All right.
Okay, so I get this money from the bank. The bank sends me money.
Uh-huh.
What can I use this money for?
This is where the conversation gets fun.
Yeah.
Okay? There literally is no limit to what you can use the money for. So you could use it to pay off an existing mortgage. Okay? You could use it for home repair or modifications.
So like if I need to make my home wheelchair accessible, just say,
Absolutely.
I can use the money for that.
Absolutely, you could. Yep. You could purchase better health insurance or long-term care insurance, which frankly can help to protect your estate in the event that you became disabled or needed nursing care or something like that.
So in other words, like if I'm using it to buy health insurance or long-term insurance, I could actually be protecting my heirs or protecting my kids' inheritance, not spending.
Not spending it, that's right. Okay. You could buy a new home. Hey, a lot of people have no idea that you can actually use a reverse mortgage to buy a house. That means you buy a house and you pay for it with a reverse mortgage and you have no payments on your new home.
That's exactly right.
It's
that's a little known
fabulous.
fact. In fact, if you look just beneath the screen here where we're talking, you might have to scroll down a little bit. You'll see a phone number down there. You can call us right in the office, and we can direct you to real estate agents that specialize in helping senior citizens buy homes with reverse mortgages.
Absolutely.
And you would have no mortgage payment setting it up as that. And
That's
again,
right.
using that phone number, you can give us a call. We can talk more about the details of that and hook you up with a real estate agent.
Yeah, and let me tell you, many, in fact, I'd say most realtors don't know about that. There's been closings where someone comes in and buys a house with a reverse mortgage, and they're going, wait a minute,
What's that?
What just happened?
Yeah.
How did you do that?
That's exactly.
So yeah, you
but now
definitely
you're
want
on
to
the
find out about it.
yeah. So and that's why you're on this call today.
Correct.
Is to learn these little known secrets.
Okay, other things. Of course, travel, maybe places you wanted to visit, gifts for your children or your grandchildren, maybe tuition or a car or something like that. Medication. Maybe you need some medication. The bottom line is you do it, you can use it for whatever you want. You stay in complete control at all times.
All right, so I can use the money for anything I want to.
Yes.
I don't have to report to anybody how I'm spending it on.
Correct.
And certainly we don't condone this, but I mean, just to make the point, you could literally take the money, go to Las Vegas, and bet it on red.
Ooh.
Wouldn't recommend that.
Don't do that, but you could.
But you could.
That's right.
Okay. So I get money. The bank's going to send me money.
Yes.
Right? How do I get that money? Like, how does it come to me?
Sure. One of the great things about a reverse mortgage is the flexibility. Okay. There's 5 different ways that you can get, receive money.
Okay.
First is a lifetime monthly income.
Okay.
And basically what they do is they would look at this the same way an insurance company would decide if they were going to pay you like a lifetime annuity payment.
Okay.
So they would look at an actuarial table and say, we think you're going to live to be this age.
Okay.
They would take the amount of money that's available to you and divide it across that many months, and that determines how much they would send to you each month.
So they're going to set me up a set amount of money each and every month.
That's correct.
What if I live longer than what they think?
That's the beauty of this system. Once that system is set up and once that payment option is chosen, they must pay you until you decease.
Or
your wife.
So not and. No, or I'm sorry, it's not or.
It's and.
It's and my wife.
If it's set up for both of you, then those payments keep coming until the last person deceases, even if you far outlive their projections.
So if I live to be, just say, 120,
yes,
and they looked at my tables and just said, 90,
yes,
they're still going to have to pay me for the next 25 years or so.
That's exactly right.
And that's a very good thing.
Yeah, so that's good to know.
All right, but I got a question. What if, again, fate calls and me and the missus, we get this reverse mortgage today,
yeah.
to say, 6 months goes by, and we're in a horrible car accident, and we both die.
And your time has come.
Yeah. Now, we've only been receiving payments for 6 months, but I was supposed to get them for, they projected I was going to be 85, so I was supposed to get it for another, 13 years.
Exactly. Again, very flexible. In this way, what would be due and paid back is only the actual amount you'd receive. So you'd only owe the 6 months worth of payments you received plus the interest on those.
So in other words, my heirs could either refinance the house and keep my home.
Correct.
Or they could sell it. My heirs could sell it, pay back the 6 months that was paid to me, plus the interest.
Correct.
And then my heirs get the balance of the home
of the proceeds.
Of the proceeds
That's
is due.
exactly right. Yeah.
Okay.
So a lot of flexibility. Okay. You can receive it all in a lump sum. So let's say you qualify for $65,000.
Okay.
You can say, I want a check for $65,000, and it's in your hand today, right now. Okay. And again, we talked about it can be used for any purpose. Okay. You can do a term certain or a period certain.
What is that?
What that means is you could say, all right, I have maybe you've got a special need that you're going to need X amount of dollars a month for the next 5 years.
Okay.
Or for the next 4 years. So you could say, I need, $250 a month or $275 a month each month for 4 years. Okay? And so they will pay that out to you for that period of time. Now,
once I've received that money for that period of time, I still don't have to start making payments back.
That is correct.
Because I have no payments. I have no mortgage payment until both me and the missus die or move out of the house.
That's right. You're still living in the house. You're still alive.
Yep.
And there you go.
And no payments.
And no payments.
Okay.
And then there's a credit line, and this one is really gaining in popularity. The credit line is set up so that everything's in place. Your reverse mortgage is, quote, live. It's working.
Okay.
Except you're actually not receiving any money right now. It's simply there and it's available to you. You might know, for instance, you've got something coming up that you will have a need, but you don't know exactly when that need will be. You don't know when it will start.
Okay.
So you can set this up and start receiving money when you need it. In whatever amounts, of course, up to the limits of what's available for you.
So in a credit line, in essence, what they would do, just as an example, is let's say I'm getting and we're just using a number.
Right.
I'm getting $100,000 on my reverse mortgage.
Yes.
And I can have it as a credit line, and as such, it's sitting in account.
Yes.
I'm not having to pay interest on it because I haven't taken any money out yet.
No interest accruing. That's right.
But in essence, I've got a bank account with $100,000 in it that I could pull out as much or as little or as often or never.
You need $5,000? Take it.
Got it.
You need $50,000? Take it. You
And
need $500? Take it. You don't need anything? Leave it.
But even if I take it out, again,
no payments.
No payments until both me and the missus die. So as we look at that, we have 5 different options here. Again, what we recommend that you involve your children, perhaps.
Absolutely.
Maybe a CPA.
A CPA, an attorney.
An attorney.
Anyone who advises you now. Who do you rely on now for advice on helping you to make good financial decisions?
Exactly.
Those are the people that you want involved in this. Because I'll tell you, we're sitting here, we're talking about a lot of the benefits of it. This is all well and good if you need a reverse mortgage.
Right.
If you don't, and frankly, it may or may not be in your best interest, but you can find out and it doesn't cost you anything, and that's a beautiful part. But you really want to rely on the folks who help you now to make good decisions.
So what we recommend that you do is, in looking at these different choices, is again, if you scroll down just beneath where we're talking here, there's a phone number. You can simply call in the office and we can schedule an appointment, either a phone appointment or you can actually come into the office and we can discuss these 5 choices. And again, we can discuss it again with your kids, your CPA, or your attorney.
Absolutely. One last point on this. The last thing there says any combination of the above or combination of any of the above. This is not carved in stone. So you can start it one way and then change it.
Oh, very nice.
See, so you could start receiving monthly payments and then all of a sudden go to a lump sum if you had to have it, or stop receiving payments if you have been, anything like that. So you're in complete control.
Okay, Ralph, I have another question for you.
Yeah.
The last year has been the last couple of years has been very interesting here in the real estate market.
Yes.
In some areas of the country, properties have gone down, 50%.
Correct.
So what happened? So I understand that when they loan me the money, they base it upon how much is the current mortgage I have on the house, if any.
Yeah.
And the value of the home.
Yes.
All right. Well, if my value, if they've said, okay, Carl, we're going to start sending you these checks each and every month, and all of a sudden the value of my home drops,
right?
Can they make my payments less?
No. This is a great feature about the reverse mortgage. You're totally protected, and basically you wind up getting the best of any event. For instance, let's say that the property value decreases, but they've agreed to pay you X amount of dollars a month for your lifespan. based on the previous value. Well, they actually have to continue paying on that basis. They can't say, oh, we refigured your house and now it's worth 40% less, so your payment's going to get cut by 40%.
So I'm protected.
You're protected on the payment.
Okay, very good.
So that works out really well.
All right. Next question I have is, what if, again, I think we've already kind of discussed this, but I think it's an important point.
It's good to review.
Yeah, if no matter how long I live, if I outlive what they think,
yes,
and they end up paying me, let's say my home is worth, just for, we're going to grab a number again.
Yeah.
My home is worth $200,000.
Right.
Just say. And they figured out that if I live to be 90, they're going to pay me that $200,000.
Yes.
And I live to be 135.
And now they've paid you $300,000
on a $200,000 house.
on a $200,000 home.
What happens?
You know, as the homeowner, you have no liability for any of that overage. They must pay you, but you are not obligated to pay back anything more than what that house sells for when it does finally sell. And the same goes for your heirs or any trust or any entity or anything like that. So again, we've already said that the lender can't cut off the payments. Now let's go the other way though. Let's say the house is worth more, and so there's equity.
So let's say the house goes up to $400,000.
That's right.
And I borrowed $200,000 on my reverse mortgage.
You borrowed $200,000. So just for the simple math, what would happen is you'd sell the house, you pay off the $200,000, and then your heirs would get the remaining $200,000. They get the remaining equity in the house. So you get the upside, but the downside is not held against you or your heirs.
And I think
your estate.
Right. And I think the important point to point out here is that the reverse mortgages that we do here are all they're all federal government backed.
Absolutely.
That this is a federally backed program, and it's federal guidelines.
Yeah.
And the federal government is real big on protecting their senior citizens, especially in this area.
Especially in this area. Again, if you'd like to find out if this is the right thing for you, give us a call. Number's right at the bottom of the screen. In fact, we're going to talk about it here in just a second, but the government has some things in place specifically to protect you and to make sure that if you do get into a reverse mortgage, you A, not only understand it fully, but B, understand why it is that it's good for you.
Exactly.
So let's go ahead and we'll move on through here.
All right. So my next question is, well, we know that, so we've made it real clear, I have zero payments until either A, I sell the house.
Yes.
B, I move out for more than a year.
Yes.
Or C, me and the missus both pass away.
Yes, assuming that both of you are on the reverse mortgage.
Correct.
Yep.
Okay.
Yep.
Now, so with those three things, if one of those things trigger it, what is owed when the repayment comes due?
Yep, let's take a look at that right now. First of all, the lender can only receive repayment for the amount paid out plus the interest on that money.
Again, so if we both passed away in just 6 months,
that's all that's due.
We only have to pay back that 6 months plus a little bit of interest.
Plus a little bit of interest. In a situation like that, there might be a circumstance where maybe your heirs have the means just to pay off that amount of money, pay off the 6 months worth of interest or payment you got, and that way they don't have to mess around selling the house or refinancing or anything like that. So each situation really is different. Okay, the property does, and this is a biggie. Property does not belong to the bank or to the lender. At any time, you are not signing the property over to anyone else. It remains in your name. It belongs to the owner or to the owner's heirs.
Just like any other mortgage.
Just like any other mortgage. This is not a life estate. We're not
signing our house over.
That's exactly right. Okay? If the owner dies, the heirs can decide then whether to sell the property or to obtain a new mortgage to pay off the reverse mortgage or refinance it or whatever. And any remaining equity belongs to the heirs of the property.
And the way I understand it is that, again, when me and the missus, again, assuming we're both on the reverse mortgage,
yes,
when we both die, that the heirs have up to a full year
to sell the house,
to sell the property. So it's not like they have to sell it tomorrow.
And not only that, if they haven't sold it in a year and they can show that they've been working on it, they can get an extension.
Extensions on that.
That's exactly right.
So let's talk about so the people that's on the call today and they go, well, geez, this sounds like something I'm interested in.
Yeah.
Are there any upfront costs to find out what's going on?
First of all, just to find out if it's right for you, no. You can find that out really without spending anything. Okay. Now, there are origination fees that are part of the initial loan balance. However, anything that's involved with setting that up, and by the way, before you actually take one, you find out specifically what those numbers are, but those are actually taken out of the mortgage, so you're not coming to closing with any money. It doesn't cost a dime to come to closing on this.
So in other words, just like a regular mortgage, we have a title and we have loan origination and some recording fees.
Correct.
All those are rolled into the loan, so I don't have to bring my checkbook.
That's exactly right.
Well, that's easy enough.
That's right.
All right, let's talk for a few minutes about what types of properties qualify. So the callers that's on the call today, they say, well, I live in this type of home.
Yeah.
Does my home qualify? Let's talk about that for a minute.
Here's the main thing, and you're going to see a common thread as we run through these things. The bottom line is, if it's a residential property, nearly all residential properties, with few exceptions, we'll hit those in a second, qualify. So right here, owner-occupied residences of up to 4 units. So it could be a fourplex and you live in one of the units. That qualifies.
Now to make it clear, it could be a condo with 100 units, and I'm the owner of that one unit. That qualifies.
Condominiums, that's exactly right.
So when you say a 4 unit, what you're talking about is I own a fourplex.
That's exactly right.
I'm living in one.
Good point.
Renting out the other 3.
Renting out the other 3.
That qualifies.
A triplex, a duplex, or of course a single-family residence.
Okay.
Okay. Condominiums, you just hit on. That's a great point. A manufactured home, if it's owned on its, you own your own lot.
Gotcha.
If you're in a park with a leased space, then that doesn't qualify. Or a townhome, of course.
All right. So let's talk about. So it looks like the common thread there was it's a residential property.
Yes.
And I own it.
Yes.
And it's my primary residence.
Correct.
Now, just for completeness, let's talk about the properties that don't qualify.
Sure. Mobile homes don't qualify.
Okay.
Okay. Trailers.
Same thing.
No.
Okay.
That's correct. Motorhomes.
Darn it.
Darn it. That's not real property. It doesn't count. Okay. Houseboats.
Oh,
yachts.
man.
Yeah. No. Sorry about that. Manufactured homes built before 1976. Doesn't matter if you own your own lot or not. If
Right.
you're built before 1976, they don't
Okay.
qualify. Okay. Timeshares don't qualify.
Right.
For the 2 weeks you own the darn thing. Barns.
Okay.
Okay, no barns. A second home or a vacation home, that would be nice, but not allowed. Rental property, no, not allowed. Commercial property is also not allowed.
So again, primarily, it's primary residence.
Yes.
We live there,
Yes.
and that's pretty much
pretty
it.
much it. Okay.
All right. Well, what are the age qualifications? In other words, how old do we need to be to get a reverse mortgage?
Great. Here's how it works. All owners and co-owners of the property must be 62 years old or older. Okay. And by the way, if there's 2 of you on title, to the home, you both need to go on for the reverse mortgage.
Okay.
You can't just do the husband or the wife. If both of you are on title, you must both be on, and you must both be 62 years old.
But again, really that protects, say, me and the missus, because, I mean, let's face it, on average, the wife outlives the husband.
Correct.
Just on average. Certainly, if we had a vote in that, well, let's not go there. But actually, having my wife on there protects her, so I'm comforted in knowing that if I do pass before she does, she has a home to live in till the day she dies with 0 payments.
0 payments.
So I think it's kind of nice to have them on there.
And also here, well, the next one kind of brings up this subject here. Anyone living in the residence under the age of 62 disqualifies the owner who is over the 62 age limit for taking that right now.
So we both need to be in it.
You both need to be 62. Now,
Got it.
We'll have people go, well, I'm 59. What do I do? Well, you wait 3 years.
Right. You go ahead and get information.
You get information. It doesn't cost you getting information. Or, well, we've talked to folks. Look, I'm 61 now, but in 5 months, I'm going to be 62. Okay, get some information, decide if this is right. And if it is, you can go ahead and have everything in place so that you can just pull that trigger once everyone is of age.
So in other words, somebody that's not quite yet 62, they can still call that number there at the bottom of our screen.
Absolutely.
And actually come on in the office. And
That's right.
In fact, we actually encourage that.
It's not too early to start. In fact, that's a really good time.
Yeah.
Okay. All right. If the property's in a trust. Okay. Here's just a couple quick things. This is pretty easy to remember. The lender may, and it depends on the lender, but the lender may require the title to be temporarily removed from the living trust so that the mortgage lien can be recorded. And then after that, the title can be returned to the trust.
Okay.
In other words, they don't want to record that lien with the trust showing as the owner.
Okay.
So
makes sense.
Back into your name. Now, People go, okay, well, what about special types of trusts? Irrevocable trusts, things like that. First of all, if your property is in an irrevocable trust, okay, and it stays in that trust, then it's not going to be eligible for a reverse mortgage. Now, could the trustee, remember, because you're not the trustee on an irrevocable trust. There's a separate trustee.
Right.
The trustee actually could move it out of the trust, okay, but you can't direct them to do that. But there's really kind of a more basic point than that, which is, typically someone who uses the irrevocable trust, their home is not titled in the name of the trust.
So I guess the bottom line on the trust, Ralph,
Yeah.
is give us a call.
Give us a call.
And we'll take a look at your trust.
Well, tell us what your situation is.
And we'll guide you in the right direction.
That's right. And by the way, a lot of folks are, they don't want to show their trust and all that. Look, we don't need everything. Typically the first page and last page, and that's easy.
Yeah,
okay?
good enough.
Okay. You hit on this just a little bit before. Reverse mortgages are backed by the government. And here's the reason why. They're regulated, they're FHA loans.
Because the government now owns FHA and Fannie Mae.
And Fannie Mae.
And so these are this is a department of the United States government.
That's exactly right. So
good enough on that.
Good enough.
All right, Ralph, here comes the biggest question of all. How do I know a reverse mortgage is right for me?
That's really a great question, and the answer is really different for everybody. The fact is, right now, as you're sitting listening to this, you don't know if it's right for you or not.
True.
Okay? That's what we're here for.
Yes.
So, first of all, you want to, if you call the number under the viewer here,
yeah.
We can help you determine, okay? But you don't just call us and speak to us, okay? Unless you're used to making all your own decisions, you never rely on anybody else, and you just want, we won't tell you not to call. However, we feel more comfortable, and we want you to feel completely comfortable. If you want to have a family member as part of the conversation,
yeah.
If you want to have as we mentioned before, your CPA or your attorney or other financial advisor that you use to help you make good decisions now.
Right.
It may turn out that this is in your best interest, but it may turn out that it's not. How do you know? Well, look, consider if you need the money. Okay, if you have no need for the money that's sitting in your home as equity, that probably this isn't going to be the best thing for you.
If you got $1 million in the bank and you don't think you're going to outlive that,
don't mess with it.
Don't mess with it.
That's right. Now, if you do need the money, if you're sitting here strapped for income and you're sitting on a house that has a massive amount of equity, well, it may make sense. Even that's not a given, but it may make sense.
Right.
So just get in touch with us with your decision makers.
Yeah.
And then we can all determine if it's really if it's in your best interest. So who should help with your decision? We've touched on this before. Look, obviously your spouse.
Yeah.
If you're married,
Definitely.
they need to be part of that. Your tax advisor, your adult children, your financial planner, your trusted friend. We've mentioned before CPAs, attorneys.
But let me ask you. So what if I consider this kind of a private decision,
Yeah.
and I don't want to involve my children? I certainly don't have to.
Nothing requires you to
Right. So I can do this as a private matter if I choose to.
if you choose to, of
no,
course.
no question about that.
Uh-huh.
Now, what about if I'm playing bridge tonight,
Yeah.
and one of the guys at my bridge table, he kind of knows it all. So he says. Ask
Right.
him; he'll tell you.
He'll tell you.
Yeah. Is that a good person to talk about reverse mortgages to?
Well, is he a good person to ask about your medical surgery you're having come up?
Yeah,
If he's not a
probably
surgeon,
not, right.
probably not. If he doesn't do this, if he doesn't move in these circles and he's not up with the latest laws, everything else, he's probably not the person to ask. Ask the people who deal with this as a profession.
And that's why we're kind of big on that one, because you hear a lot of people say a lot of things. We want to make sure that you have factual information. In fact, we've got some free reports, some articles that we actually wrote. So
Yes.
we're not going to just give you the book. We wrote the book.
Correct.
And we have some great articles to give you some more factual information.
Right.
All right, Ralph. So here we are. We're professionals here at our company.
Right.
And we specialize in doing reverse mortgages.
Yeah.
And it's no secret we get paid when we work. Just like the callers, they got paid when they work. Well, we get paid when we work too.
Absolutely.
If a loan is made.
If a loan is made.
Right. So some people might go, well, yeah, you guys have a vested interest in this because you get paid if I do. How are the callers protected to make sure they get factual information from somebody that does not get compensated, does not get paid when the mortgage is done?
That's an excellent question, and actually I had sort of alluded to this a few minutes ago when we kind of started our discussion. As part of your process, you cannot, if you are ready to go today and wanted to sign on the dot, you cannot do this until you complete a consultation with an independent certified reverse mortgage counselor.
That is licensed by the federal government.
That's correct. Who has no financial interest in whether or not you do this loan.
In other words, whether they get the loan or not, this person doesn't lose a dime, doesn't make a dime.
That's exactly right.
And this person is strictly to
make sure that you understand how reverse mortgages work and why it's good for you if in fact it is good for you.
And or to show you why it's not if it's not.
Or to show you why it's not if it's not.
So this is just a protected mechanism that we have in place.
Correct.
That we do require that you get an independent consultation.
Absolutely.
All right. Well, Ralph, in looking at this, would it be better just to get a regular loan? In other words, if we just pulled out a regular loan, would that be an option for us?
The fact is, that may be better for you depending on your situation. And again, we can tell you that if you give us a call. Okay, we can help you determine that. We first of all would take a look at what you need the money for, because if you're considering actually going and borrowing money that you'd have to make payments on, that would seem to indicate that you have a specific need for which you need to get a hold of some money. Okay, so first of all, do you have the income to cover the monthly payments? Because if you go and borrow like a regular loan,
you have to make payments.
You got to make payments. See, with reverse mortgage, we've gone over and over. We've harped on this.
Payments.
There's no payments. But with a regular loan, yes, you would have to make payments.
And I guess we'd have to qualify also then.
Right. Since payments are due, now they do care about your income and they do care about your credit. Okay? Frankly, a lot of seniors, just because of the situation concerning their employment, a lot of them find it hard to qualify for a loan that they have to make payments on.
And then why? I mean, the first thing that comes to my mind, and I know there's certain situations for everybody, but I would say as a broad brush, the reverse mortgage typically is a better answer, because then you do not have to make a payment. And if you have to check a box, want to make a payment, don't want to make a payment.
Let me think.
All right, but now, and this is a great question that you got on the screen here.
Yes.
Is, will a reverse mortgage affect my benefits?
Yeah, this is another fun thing to talk about. Reverse mortgages do not affect payments and benefits received like Social Security, Medicare, pensions. And here's the reason why. We mentioned before that the income from a reverse mortgage is tax-free. The money you receive from a reverse mortgage is tax-free. It's not considered income. Even if they're paying you, you think, well, I've got an income check coming in every month. Okay, it's not income. That's actually borrowed funds that you don't have to make payments on. You're not going to pay that money back. See, and because it's borrowed money, there's no taxes due on it. You don't pay tax on money that you borrow. And by the same token, because it's not income, it doesn't affect Social Security, Medicare, or other pensions. If you went and got a part-time job someplace, a lot of times folks are concerned they can't work too much because the income affects their Social Security. This has, your Social Security is completely unaffected by this. Now, you'll want to make sure that you discuss this with your tax advisor and so on, but that's how the laws are set up.
And you know what? I guess we let's just make a clarification also, is that you or I, we're neither CPAs,
absolutely not,
attorneys, or doctors.
Or doctors. No, but I did stay in a Holiday Inn Express.
That's right.
Night. Yeah.
But we are loan professionals, and we do here specialize in reverse mortgages.
Correct.
All right, so let's just kind of summarize a couple things here. These are the most common myths that we find come into the office. So let's cover a couple of those.
Big misconception. First is, the lender takes the home. False. The lender does not take the home. You do not sign it over to them. It stays in your name. This is not a life estate. At all times, the property remains as yours or your heirs or your estates.
Yeah, because it can't get foreclosed upon because I'm not making any payment.
Right. If you go get a regular mortgage now in your house, who owns it? You do. The lending institution doesn't own it. It works exactly the same. Okay? I can be thrown out of my house. False. You can't be thrown out because you own it. See?
And you're not having to make a payment.
And you don't have to make a payment, so you can't default.
That's right.
See, they can never foreclose on a reverse mortgage because
there's no payment due.
There's no payments, so you can't default on it. So you can never get thrown out of your house. Okay? I can owe more than the home is worth. Well, you know what? That's false, but kind of not. The thing is, you actually can theoretically owe more than the house is worth, because we talked about a $200,000 house, but you way outlive the projection. So now you owe $300 on a house that's only worth $200. The hook is that you can never be made to pay back more than the house is worth.
That's right. So whenever the house is sold at the point in time of my death and the Mrs. death,
right,
when the house is sold, they only have to pay back what they got from the sale of the house.
That's right.
And then the rest is forgiven.
And the rest is not held against your heirs or your estate or anything like that. It's eaten by the lender. Okay?
I like this. This is one of the probably the single biggest myth that we get.
Yeah. Oh, my kids will never go for this. Right? They look. That house was going to them, and they're going to be. That's for them. Okay. Well, I would just tell you, you shouldn't jump to that conclusion. And a lot of folks that we speak to, once they talk to their kids, they haven't spoken to their kids.
Right.
Okay? Now, some kids, yeah, okay, and I'm not here to comment on that. But the idea is that I know that if my parents were in a situation where they needed income and they had the equity in their house that could provide for them and they could be protected in these ways, it would certainly be worth looking at. And if they didn't do it, I would not want it to be because of me wanting to get my hands on the house.
And you know what I say on this one, Ralph, is I tell people when they come into the office, I say, look, what would you have told your parents?
Oh, that's great. Absolutely.
Because somehow we think, yeah, but our kids are different. No, they're not.
No,
they're not. And what would I have told my parents had I known that they could do a reverse mortgage and take that cruise that they always wanted to take?
Right.
Or go do that travel they always want to do? Or maybe one of my kids, give them a scholarship to go to college. Mm-hmm. Maybe they want to go to a private school that I can't afford.
Right.
And my parents could gift one of them by doing a reverse mortgage.
Right.
Or mom needed some medication. Of course I'd want mom to have the money for the medication, right? Honestly, what child wouldn't want that for their parent?
Who would want to withhold that?
Exactly.
Now, again, look, every situation is different. So, we're not throwing out, just, generalizations that it's all the same for everybody, okay? It's not. But don't assume that your kids won't support the idea. That's the idea. We find most of the time the kids are more interested in what is in your best interest.
And frankly, if you're using it to buy health insurance and or long-term care insurance, again, like we said earlier, that can actually protect my heirs' inheritance.
That's exactly right.
Well, Ralph, where would I find a safe reverse mortgage lender?
Well, we got some good news.
Yeah?
You've already found him.
You already found us.
That's exactly right. Hey, look, our number is right here underneath the screen, underneath our viewer here. We would like to help you determine whether or not this is something that makes sense for you. Okay, so why use us? Well, first of all, few lenders actually specialize in reverse mortgages.
Yeah, most lenders don't do reverse mortgages, much less specialize in it.
A lot of them will tell you, oh yeah, I can do those. Well, maybe they can, but they don't.
Right, it's not something they specialize in.
They don't specialize in them. Okay? Frankly, our company, it's a name you can trust. It's a name you can depend on.
I mean, either somebody sent you here.
That's
right.
You know,
because we have all these people on the call today, and some came from different ways. But somebody, obviously, and maybe it was you, maybe you've done business with us before, but somebody trusted us enough to have you here to begin with.
That's right. Okay? We encourage you to involve, we said this before, your family, your accountant, your attorney, your trusted advisor, your friends.
Real big on this one.
Really, really big on that. Because these are the people who help you to make good decisions now.
Yeah, and our philosophy, frankly, is not to pressure somebody into doing something. Our philosophy is to educate you so you make your own decisions. We're not going to help you make your decision. We're going to educate you.
That's correct.
So that you can make your decisions. And we're going to educate you on the articles that we've written. And because, again, we wrote the book, so to speak.
Correct. Yep.
And the other thing, I think this is a real strong one in today's market. You know, people have come and gone, mortgage companies.
Fly by night.
Yeah.
Yep.
Look, we've been here. We're going to be here.
That's right.
So we withstood the I don't know what percentage went out of business, but most.
There's a lot of them.
Yeah.
And, we don't know what the future holds, but we certainly like to think that in terms at least of the mortgage lending industry, that the worst is likely over.
Yeah.
And so having come through that, we're in a better position now, frankly, than most companies were even a short time ago.
Yeah,
that's
absolutely.
Right. That's right.
So, Ralph, what do we want them to do? What do they need to do right now?
Okay. What you need to do now is call the office to set up your free, no obligation consultation with a reverse mortgage specialist. Okay, again, it is a requirement to actually get one. You can't get a reverse mortgage without going through this step, and it doesn't cost you anything.
Absolutely.
See? That's the first thing. Get our free articles. Get the articles that we've written about this. We've got a Q&A that is just killer. It's got great information. A copy of today's call. This is recorded.
Yep. So we recorded today's call, and so if you would like a copy of it, either to send to somebody that wasn't here today, or maybe we said a couple things and you couldn't, you weren't able to
jot them all down.
Couldn't just jot them all down.
Yeah.
We encourage you to listen to this again. So just call the office. This is free for you.
That's right.
And we'll give you a copy of what you're listening to right now.
Yeah, absolutely.
And best of all,
there's no obligation. There's nothing to sign. All of this we provide to you at no cost.
Yeah. In fact, when you come in on your first consultation with us,
yeah,
we actually tell you, leave your checkbook at home, leave your ink pen at home.
Right.
Nothing's going to be signed.
Correct.
It's strictly an information gathering service. So, when you come for your first consultation, just relax and just come and get information. You're not going to be pressured to sign anything. We're not going to have anything for you to sign.
All we're going to do is talk.
All we're going to do is talk and provide you information, and then send you home, and then you decide what's in your best interest.
You can take what we've given you, and with those that help you with your decisions, and decide if that's really what makes sense. And as you go through this, you might decide that there's some questions that you forgot to ask. Something came up, you need some clarification. Hey, give us a call.
Yeah, absolutely.
That's what we're here for.
So, Ralph, I appreciate you helping today with the call.
This has been great. I love talking about this program again because in the right situation, it can truly be a godsend for somebody.
No, it solves a lot of problems,
Yeah.
and we have a lot of stories that time permitting, we'd love to share with you.
Correct.
Come into the office, and we'll show you some of them. And
That's right.
And how this has literally been life changing, and the fact that somebody can actually buy a house with a reverse mortgage and never make a payment.
Yeah.
That's just...
It's mind-blowing.
It's mind-blowing.
It really is.
We've seen people buy twice as much home as what they thought they could afford because they have no payment.
Because there's no payments to make.
There's no payments whatsoever.
Yeah.
All right, well, again, scroll down beneath. There's the phone number. Give us a call. Get a copy of today's call. Get your free articles, and we look forward to talking to you when you call in. Thanks for your time today, and call right now. We'll speak to you when you call in.